Hey everyone, it's Lou Joseph from Remax Preferred Realty. Hope you're doing well today. Today's video is all about January 2021 and how that compares to January 2020. So we're going to start off today with our basic report. And what we're seeing here on the screen is January of this year compared to January of last year. And we actually seen a decrease in listings by 12.8%. So last year, the market was pretty tight for listings, and it's even tighter this year. So our inventory has dropped even further, which is causing prices to rise. And we're looking here, our year-to-date information. It's only January, so we don't have very much to go off of, so we'll just skip this part here. As we go along through the year, we'll see more of information about the year to date. So sales have increased. So inventory has decreased in January comparing to last January, and sales have increased by 26.5%. So sales are up and listings are down. So this is the environment where it's extremely competitive for buyers in the market today. Okay, so we're looking at the average price. So January of last year, 2020, the average price in January of last year was $377,000, and this year, 2021, the average price is $510,000. Imagine that, the average price. Like, so if you're in the market last January and you thought it was expensive, well, it's even more expensive now. And we have median price. So the median price is a little different from average price. Median is more, it's more of the mid-range of where prices are. Actually, the most of the sales are concentrated in that range. So we're seeing 460,000 is the median versus 353,000 of last year. And if we look at the homes that sold, so we look at January 2021, and we see that most of the homes that have sold are between 420 and 550. So that makes sense along with the median price. So 102 homes sold that last month in that price range. And year to date, of course, we don't have too much information year to date yet because we're just starting out the year. So what I like to also do is I like to go into our system here and take a look at some information as well. Sales to list ratio, I like to look at that to compare what homes are selling for above, the asking price. So taking here Windsor-Essex County, I'm going to look at Windsor-Essex County as a whole. I'm going to stick with residential, okay? And let's see what we get. Okay, so back in this chart goes back to 2016 and until now. So we see that prices over asking have trended upwards. If we break it down to data, then we actually see some numbers here. So we see that in 2020, in December, homes are selling in Windsor-Essex County, mind you, that's a pretty broad area. So that's, you're looking at Windsor, Tecumseh, Lakeshore, Leamington, it's all the whole Windsor-Essex County. So if we break this down by region, numbers will be different. So we're seeing here that it's 114%, so meaning 14% over the asking. And here in January, we're 111. So I'm going to take this down and break it down. So that means 11%, 11.7% over the asking price on average. So I'm going to take this down to basically Windsor, LaSalle, and Tecumseh and see what those numbers show. Okay, so there's exact same pattern here. So we're seeing here a little different numbers. So Windsor, there's more of a demand in the city of Windsor, LaSalle, and Tecumseh. So this is showing at 122%. So that means that homes are on average in all price ranges are selling 22.8% over asking price. So if you have $100,000 house, which doesn't exist anymore, it would be $22,000 above the list price. So it would be $44,000 for a $200,000 house above list price. So in December it was 23. So it's keeping in pace with those numbers. And if we look back here, 2016 till now, we see that homes are selling below asking on average in Windsor, LaSalle, and Tecumseh by a few percent. You're looking in anywhere from 2 to 3%. Then the next year, you're seeing some bidding wars happening in some of these months here, 2018, 19, and 20. So now we're in the 20 percentile, so 20% plus over asking. And if we're looking back at history, this is the most that we're seeing over asking price in our, and actually, if you talk to any real estate agents or anybody that's been in the industry for over 30, 40 years, they have never seen this market ever. So this is not something that comes along, every day. But let's take it down a little further. Let's stay with Windsor, LaSalle, and Tecumseh, but let's break it down to price ranges. So we're going to take it from 0 to 400 list price. Let's see what that shows. Okay, so same patterns, right? If you just look at the chart vaguely, but when we look at the data, instead of 122, it's 132%. So 32% over asking in that price range under 400,000. So if you're looking for a house that's listed under 400,000, on average, you're going to expect there to be a 32% over the list price as far as sale price. And if we want to even bring this down to, say, 250, because there's still some homes that are listed at 250. Okay, this is, I don't even know if this data is correct or not, but it's showing 1,120%. I can't really answer that for you, why it would look like that. Let's just put in 300, see. Okay, let's take a look at the data. So under $300,000 list price, so $299,999, we see 44% over asking as far as sale price. Biggest number out of any year. You can pick out any year, and that'll be the biggest number that you'll see. So why so much over asking? There's a couple of reasons. Well, obviously it's low supply and high demand. A lot of demand is I feel like it's a little bit of blind demand in as far as investors. Like, investors are just coming here and going wild. They're just buying property. They have money that they need to put somewhere, and they're putting it here. Obviously, because our average price is still lower than a lot of places in Ontario and across Canada. But it almost feels like it's blindly throwing money at these properties. Maybe investors would tell you differently, but you see what kind of return you're getting, and that's why you're seeing higher rents. Because if you're buying a 2-bedroom, 1-bath home that needs work, and you're buying it for $250,000, you're gonna have to put some money into it, and you're gonna have to charge a certain rent to make it worth your while. So I feel that tenants are being a little bit squeezed as far as how much rents have risen. I think there's only so much the market will bear as far as rents go, as far as how high rents increase. So prices go up, rents go up, and there's going to be a rent squeeze somewhere in this within this few years coming up, I think. But also, if a house is worth 300,000, people like agents and sellers are on purpose listing them for 200,000. Why would they do this? There's a couple of reasons. When there's a bidding war, people bid on emotion and they want to win. It's a big heartache to lose in a bidding war when you're a buyer. So they want to win. They may purchase the property 10, 20,000 more than if this property was listed at market value. And on top of that, you have a situation where if you're in a bidding war, are you going to put conditions? Are you going to mess with the offer too much? Are you going to put a financing, a home inspection? Are you going to play with the offer date? Are you going to play with your deposit? Are you going to play with chattels? Like the fridge may not be immaculate shape, may not be working, but are you going to really complain about that in your offer and want a working fridge on closing? Meanwhile, you're competing with other offers? Probably not. So it is a seller's market. Buyers are in a situation where they're buying property and not asking for many concessions. They don't. They're not going to be nitpicking over a sub pump that looks like it needs to be replaced. It's that kind of market. So that's one thing I look at is sale price to list price ratio. If we took like a historic price trend, let's just click that really quick. And let's just keep it open. As far as price range, let's stick with Windsor, LaSalle, and Tecumseh. I do occasionally work out in Lakeshore, Amherstburg. Very rarely do I go out to the counties, but I do. But this I believe this video might be seen by mostly people that are in Windsor, LaSalle, Tecumseh. That's mostly where I work and I have clients, my client base in. But let's just take a look at Windsor, LaSalle, Tecumseh, and let's look at historic price trends. Okay. So we see here from 2011 all the way out to where we are today. So this is the median sale price, not the average sale price. The average gets skewed, right? So if you had some sales that are 200 and you have a few sales that are 2 million, the average is going to give you a skewed, I think, outlook of the market versus median. If we did our math, median is where the bulk of the numbers are. So this is the bulk of the properties. The median number is 420,000. Now, if we look back in 2011, it's 130,000. So this is incredible gains in 10 years. This is a 10-year snapshot of where prices have gone. So historic count of active listings. This is basically the chart for Windsor, LaSalle, and Tecumseh. So it just shows you a snapshot of active listings on the market in Windsor, Tecumseh, and LaSalle. We see here that we're at 807. Over here in 2018, it was actually, we had very low active listings at 601. Where last year, the listings were pretty low. Where were they? The lowest? Yeah, the 800s here. So last year, you've seen in December, February, March, that's where the low number of active listings were. Where the high listings, the high amount of listings you'll see active would be June, July, August, September. So that, that makes sense. When you go into summer and fall, you'll see active listings increase at that point. So here we're going to look at months of inventory. So this is the months of inventory statistic. It just gives you an idea of how many months of inventory do you have if homes are on the market and demand is staying the way it is. How many months would it take for all the real estate to sell, like months of inventory? So that you see that we have trended downward. If we look at the data, we see months of inventory in 2011 was 9 months of inventory. So that's the highest out of these years here, these 5 years, or, from 2011 to 2016, 9 months. And then if we go all the way down to 2020, so we're going 10 years now, this is 3 months inventory. So last year we had a lot of months where we had 2 months of inventory, and now we're at 3 months. So if you look across from 2007, actually, if you look at 2016 even, this is when we really started to pick up the pace here. 2 months of inventory, okay? This is when we're in a seller's market, that is a strong seller's market. 2 months inventory all across since 2016. In 2015, we didn't see any 2 months inventory, but we started seeing 3. But it definitely picked up the pace from there. So anytime you're in a real estate market that has 2 months of inventory, it's an incredibly strong market. If the market is, if you're seeing more of 4 to 5 months inventory, you're starting to get more into a balanced market. And if you're seeing 8 months inventory up, I would say you're seeing a buyer's market. So, whoever has money when the market is showing 8 months inventory is going to do well when they invest, when they put money into those markets. And if they come out of that, obviously, but when you have 8, 9, 10 months inventory, nobody wants to buy real estate. I remember I was advertising online in Toronto for people to buy real estate back in 2011 and 10. And it was quiet. Nobody wanted to invest. You'd go meet with property management companies. They're pretty kind of down on their luck, right? Like there's not much as far as vacancies were higher. And they weren't too optimistic. Now everybody is doing incredibly well. So do I say investing now when there's 2 months inventory is the best thing to do? I'm not 100% convinced, but if you want to cost average into real estate, I would say that probably be maybe the smartest thing, because if you wait again till next year and the year after and prices keep going up, then you missed the boat. But if you bought now and you cost average your way into the market, you bought one property now, one a year or one every 2 to 3 years. So if you're an investor, I think that might be the safest approach versus just dumping everything into it right now, because 2 months inventory is a strong market. And as you can see in the charts and the prices, when you had 5, 6, 7 months, 8 months, 9 months of inventory, were times when prices didn't appreciate as much. And those are the times that you can probably get yourself a bargain. So maybe the approach will be cost averaging into real estate. I know that when you look at investments, stocks or real estate, the cost average approach allows you to have a smooth gain as far as percentages wise. You have a smooth average gain versus throwing it all into one thing, right? Like, so you throw all your money into one asset class at one particular time. And if you chose wrongly, you lose, right? If you chose right, you win. And that's where the big risk and reward is. So I'm not too convinced of putting all your eggs in one basket right now. Now, if you're a person that is buying a home to live in there, to enjoy the property, have a steady income, your career is not going away anytime soon, I say you buy anytime, right? You know, especially with interest rates low, you know, get into an interest rate, maybe go variable for a year or two and then lock in for 5 years. I think that if you're staying in a home that you're going to enjoy and you're going to live in, and your kids are going to go to school in that general area you want to be in, then a long-term hold may be a good approach. You know, 5 years plus, more like maybe 8 to 10 years if you're looking to stay somewhere. I know that people want to know that, you know, will my property go up in 2 or 3 or 4 years from now? In the market, I can't predict that far ahead. I know that this year it's strong, and probably most likely next year will be strong. But what happens in 2023 when interest rates are supposedly going to creep upwards? They're not going to be locked low forever. What happens? Do prices keep going up, or do they go sideways? Real estate in general doesn't crash like stock markets. Like, they won't crash like 50% in 3 months, you know? So know your approach, look at your risk assessments, and if you're looking for advice on what to do in the market, definitely talk to your local realtor that you trust. I'd be glad to answer any questions for you. You look at the data here today, you kind of have an idea, I think, where the market is going. If you have a home that you have to sell, you don't have to buy right now, that is amazing, amazing opportunity for you, I'd say right now. If you're buying and selling, you know, your selling is you're going to be okay selling. The buying is going to be a challenge, I'll tell you right now. Don't get your heart locked into every house that you put an offer in, because eventually you're going to get really frustrated and it's going to start breaking you down. And eventually you might be overbidding possibly on property just to obtain it. And as we see, buyers are overbidding on property. But, you know, we're in a situation now where eventually this pandemic is going to end at some point, I would believe. And at that point, what happens to the market? You know, what happens to our economy? What happens to interest rates? So we got to take a look at all these things and make the best decision possible. But, you know, a home that you're going to live in is just an amazing thing. It's you're getting equity over a course of time, especially over a course of a decade. So it is a very desirable thing to be a homeowner, especially when homes are still affordable, believe it or not, in Windsor. So I hope you stay safe. I'm going to end the video now, and I hope you got some value out of this. And if you have any questions, feel free to contact me anytime. My contact information will be in the description below. And have a great week. Take care.